What is going on, everyone? Hope you're having a great day today. Please, please, please subscribe to my channel. I do a lot of stock analysis, and hopefully if you like this, brings you some type of value, you'll consider subscribing too. I've seen a little bit of a gain in followers lately, subscribers, and I really appreciate that. I truly, truly appreciate anyone and everyone that subscribes. Thank you so much. Now, let's get right into this. So, Microsoft is going to be, I think, the best stock of 2021. Uh, it is basically a technology bond where you know that you're going to get a consistent yield every year and it's not going anywhere. You're going to get consistent payments, and in that case, it makes its cash flows all the more valuable with how stable it is. So let's do some analysis like I have done in my other videos. So please subscribe to my other videos and go watch those too. Let's get into the analysis of Microsoft. As we can see, we start out in tip ranks, which is like an analyst price target kind of place. It compiles all the price targets from analysts on a given stock. You can search for any stock that you want to. In this case, I've already started out with Microsoft. As of December 11th, which was a Friday, at the close of the market, it was trading at $213. Microsoft is listed as a strong buy with 22 buy analyst ratings, 0 hold and 0 sell. This thing is, Thanos. This thing is huge. This thing is Goliath. This thing is a monster. It just does not do wrong, and it is a machine. So we have low expectations for a price target of 235. We have a high of 260, and the average is about 248. Compared to this close, it's about a 16% upside. Now let's look at the stock analysis. It's an outperform. This thing, based on the analyst overview, gets a 9 out of 10. That's pretty incredible. Now let's look at the financials of Microsoft. So if we look at the financials of Microsoft, we're going to see a few things. And it's pretty incredible just because of the size of Microsoft and how long it's been around that it is so consistent. And it is not going anywhere anytime soon as far as, falling out from being a bad stock. It is a great stock. It's one of the greatest of all times, one of the GOATs. And we're going to look at that real quick. So back in from 2015 to 2016, Microsoft saw about a $2 billion dip in its revenues. And then from 2016 going forward, it just started plowing through all kinds of business segments, and revenues have just gone up exponentially, especially because of Microsoft Azure, its cloud services. That's like a double-digit growth, and that provides a lot of revenue on top of their software, their hardware, everything else in between, their LinkedIn acquisition, all that. So it went from, in 2016, 91 billion in revenue to, by the middle of 2020, 143 billion in revenue. It jumped a lot. Like that's incredible to see it go from 91 to 143. That's insane. Absolutely insane. So we can see that they had 143 billion in revenue and a total net income of about 44 billion. That's huge. This thing is consistently between 20 and 30% profit margin every year. You can bet on it. You can bet on it consistently being between 20 and 30% profit margin. That is insane for a dividend-paying company in the technology sector that has 143 billion in revenue to consistently, year after year, get about a 20 to 30% profit margin. That is huge. That's why they pay dividends. That's why they're consistently going to pay dividends. Now let's look at the balance sheet. The balance sheet for Microsoft is one of the most impressive ever in the history of, the financials of any company. So let's look at it. Their cash, they have a total of about billion in cash. Like close to it when you factor everything in. I've actually seen stats lately that say it's closer because this is, as of 6:30, but I've heard it's about 140 about 140 billion. So that's a lot. That's about, like, 5 billion more than what's reported right here. But they have about 140 billion in cash. And that has just gone up. Like, their cash pile, as you can see over the years, has just gone up and up. So that's crazy to have that much cash on hand. They actually started doing a little bit more, a few more acquisitions, smaller ones, of course, smaller acquisitions, and you can see that is, why the pile went down a little bit. But they started acquiring more companies, especially in gaming. If you're a big gamer, then you know that they've bought a lot of video game studios and a lot of video game technology companies. Anyway, let's look at one of my favorite things. Current assets versus current liabilities, aka working capital. Microsoft has a total current assets of about 181 billion, and they have total current liabilities of about 72 billion. That is a ginormous gap between current assets and current liabilities. They could pay off all of their current liabilities like 2 times over. That is crazy. That's so insane to see that. And then their total long-term debt, which is another thing that I like to look at right here, is about 59 billion. So they've actually, they went up 76, 72, 66. They went up from 40 to 76, but they've slowly, as you can see, been paying off some of their debt. That's, again, another consistently well-run company will continue to pay off debt and not issue more. We want to see this going down. That's a sign of a great, healthy company. On top of a great gap in terms of the working capital, their total current assets versus total current liabilities, we like to see that very much. Now let's go to the cash flow statement, and we'll actually see this in a little bit more detail as far as what I'm talking about with, paying down debt and issuing debt, because that's a huge thing. If you have a company that's issuing, like, just saying off the top of my head, like $10 billion a year in debt and only paying off 2 billion, that's not really going to get them anywhere. They still have about 8 billion. So anyway, let's look at it. So if we go down to, we can see acquisitions, see they've made, this was LinkedIn back in 2017, by the middle of 2017. That was LinkedIn. That was the LinkedIn price tag, is this acquisition of about 26 billion. That was pretty much all that Microsoft spent their money on that year. And as you can see, in 2018, they were like, we're not really going to spend much this year. Anyway, they've spent about, a total of close to 5 billion in the last 2 years, and that's, again, a lot on like video game stuff, studios and game technology. So we can see acquisitions, they do that, but long-term debt right down here. Issuances, they've not issued long-term debt since 2018. That's probably a pretty smart idea. And again, this is used to finance purchases of things like LinkedIn, so you don't have to take all your cash off the board. And then we see that they've actually started paying down debt. So they've paid about $9.5 billion in debt in the last 2 years. They've not issued, and they've paid off almost close, let's just say $10 billion. That's pretty good. That's pretty amazing. We don't want to see this growing, and we do want to see this growing. We want to see the long-term debt repayments growing, and we don't want to see the issuance growing. So that's a great thing. Now, lastly, let's go to a portfolio of Microsoft. So what does a portfolio of Microsoft look like if you had invested $10,000 back in 1985? Yes, Microsoft has been around for a while. They've never taken themselves private, and they've never been bought out by anyone. They've been their own company ever since. So $10,000 with dividends reinvested. Let's look at it. So Microsoft actually IPO'd in April of 1986. And since then, when you invested $10,000 in 1986, by November 2020, your $10,000 would now be 20 million. $20 million for a 25% compound annual growth rate. This is absolutely incredible to see, how many years Microsoft has been out here, almost 35 years, and yet, we can still see a 25% annual growth rate for this company that again does pay dividends, and it is just so consistent. It's like a technology bond. You buy into it and you are going to get your payments, and you know that you're investing in such a sound and safe investment. That's not my opinion, or sorry, that is my opinion. I'm not telling you what to do, but like you can see for yourself that this is, unreal, and that's pretty incredible to see like 35 years worth of, trading, and you get 25% over its lifetime. That's pretty incredible. Anyway, I hope that you guys enjoyed this. Please like this video if you've gotten this far, and yeah, go watch a few of my other videos and subscribe. Thank you.